Welcome to the Nature Back Talk Show with people turning the world greener. Today I am speaking about impact investing with Kristin Hull from Nia. Enjoy the show. Welcome to Nature Back, Kristin.
Hello, thank you for having me.
Tell us in a few words, what is Nia doing? How did you come up with the idea?
Nia actually means intention and purpose. So Nia Impact Capital is our asset management firm where we help people invest their money with their values. We have been fossil fuel free since inception, and we invest in companies that meet one or more of our 6 solution themes based on their revenue. So we are looking for companies who are profiting from purpose, and companies, we build portfolios of companies that are helping in the transition from our incumbent extractive economy to the next just and sustainable and inclusive economy.
People often think the two things are somehow contradictory, impact and profit. In the years in the industry or in the investment industry, you probably understood that it's not really all case.
Whoever decided there would be this dichotomy, whoever decided that definitely felt threatened by investors moving away from fossil fuels, moving away from weapons, moving away from companies that don't have diverse leadership. And so that narrative has become quite loud, and yet there isn't any research to back it up. And in fact, there are studies now saying that pension plans in the U.S. that had been divested from fossil fuels for the last 10 years have done better. So the research is actually saying that there could be some industries that are causing risk not only to our planet, but also to our investment portfolios. And so we actually use a lot of this research in our strategy as far as looking for the best teams with the best hiring practices. We want to see really strong human capital management for all of our companies, in addition to asking them for transparency on whether they're measuring scope 1, 2, and 3 emissions, what their carbon goals are as far as reducing carbon. And then also, again, we look for companies whose very revenue sources are coming from the solutions to our global risks. So by constructing the portfolio in itself, we're reducing risk both to the environment and to investment portfolios as far as financial returns. So it's an interesting place to be right now because politically, we're so divided. And there's a lot of rhetoric coming to, you can't make money this way. And yet the research and the facts show the other way.
But we have regularly seen that the facts and the research is not, what people follow when they make their decisions, also on the political side. How do you kind of battle this?
That's right. Well, we just stay consistent. And we continue with our same thesis. We haven't had any style drift. So, and yet here in the US, we are going to have, it's getting loud on both sides. And so we are seeing quite a bit of political pullback, pushback as far as regulations, what that's going to look like for companies and then also for investors. And so we're certainly buckling our seatbelts. We're here, we're staying consistent, we're growing because what the anti-ESG movement has done, actually, it's not even a movement. It's just some loud individuals. Really, I think a movement is lots of people working together, and that's not what's happening. But it has become an invitation for particularly people in the U.S. to question, what are they holding? Most people never even look to see what's in their 401k and what companies they might have in their retirement fund or in their investment portfolio. So now, while we don't want to have political debates at the Thanksgiving table, it is, people are questioning, and women and young people want to know what's in their portfolio. The men do too. And yet now women and young people are part of the dialogue, and they want to know what they're holding. They want to own what they own, and they want to be really proud of what they own. And so aligning portfolios with what's going to drive the next sustainable economy is really what makes sense for the short term and the long term.
Absolutely. Can't really debate on that one. But the kind of probably everybody who's listening to the show understands that sustainable economy is the only way forward. At the same time, in January, you will have the new people running the country, where it seems that the let's say sustainable is usually not part of their vocabulary.
That's right.
How do you tackle that challenge?
Well, the returns are there. So the proof is in the pudding as far as what investment portfolios will do. We also have some, I guess, hope that the state of California does lead in requiring disclosures, as does Europe. And so most of our companies are global in their revenues and in their pipelines. And so they will need to report to the state of California and the European Union, who will still require a lot of these disclosures and transparencies as far as reporting. So we're actually not that worried. We're really not that worried. So there will be a little bit of mayhem with, and this happened in the last Trump presidency, with tariffs. And will there be tariffs with China? Will they be higher this week? Will they be lower next week? Will it be Canada? Will it be Mexico? And so really getting to know the companies in your portfolio and where they are deriving parts, solutions, factories, et cetera, has just, I think, called on portfolio managers like ourselves who really know our companies really well, helps us navigate, what all of those certain geopolitical stances will be.
And from the sustainable economy perspective, of course, if the factories are close to the consumers or in the same country, tariffs should not be an issue. They are more of an issue for the global enterprises who try to, make a buck anywhere where they can.
And yeah. I mean, when we're thinking about fossil fuels, when we're talking about fossil fuels in general, the transportation is one of the largest issues, right? It's one of the biggest risks because pipelines break, they can spill, but also it's one of the major traffic pieces in our oceans as far as ocean liners carrying a lot of this oil. And so when we are moving to more local, as you mentioned, and then also sustainable wind, solar, and even waves is more local. And so we won't have those, both the tariff issues to the extent when we are producing our energy locally. And then how will it change as far as the local movements when we are going to see disruption in the geopolitical context based on what we're hearing from how Trump will govern again. And I think the world is ready for that disruption.
Absolutely. In asset management, you probably, have in the portfolios companies, I don't know, dozens or hundreds or thousands. It's not like in a VC world where investors would be making investment into 1, 2, 3 and kind of limited amount of companies.
So we actually have a very VC-like play in public equities, and we don't start with an index. So an index kind of invented in the 60s, popularized in the 70s and 80s, and now really just the water we swim in as far as large funds. The S&P 500 has 500 of the largest U.S. companies, MSCI, ACWI, also a common benchmark index, 2,000 at minimum at any given time. We push that aside because that's part of our incumbent economy where nobody really knows what they own because there's so many things in it. And we start and build portfolios one company at a time. So it's very much like a VC play in that we're doing a lot of due diligence on each company and building a very diversified portfolio, but a little bit old school stock picking. So we cap our portfolios at about 50 companies for our flagship across about 9 different big sectors of the economy across all of our 6 solution themes, and then, of course, across domicile, so geographies, as well as our revenues are quite global. And then within each of our companies, we have quite a bit of diversity, both of revenue streams and then also in management. So very carefully constructed portfolios of companies that we know well.
What are these 6 solutions?
our solution themes, I came up with those in 2012, and it's using systems thinking to ask the question, what is needed for people and planet, not only to survive, but to thrive together? And then what will the market reward for? So where are the areas of the economy that we need to grow? And where will the companies do best? And so that's backing up from what is the end that we want, and then where are we going? And we come up with sustainable planet. And so in that, we have building efficiencies as also quite a bit of sustainable energy. So wind, solar, waves, as well as reducing the amount of energy that any buildings might be having. We also have natural and organic foods. And with that, we're talking about healthy people and healthy soils, moving away from big ag to a more regenerative models where we can, and where that's available in publicly traded companies. Healthcare, specifically focused on areas of the economy where healthcare has not, I guess, come to fruition as far as really making achievements. So looking at marginalized groups as well as women as far as closing health gaps, and looking for companies that are researching really innovative solutions. And then we also need to see access. So that's our healthcare area. We look across a portfolio for education and then also communications. And then we're looking at eco and sustainable transportation and housing.
Okay, that makes a lot of sense as the overall theme. Interesting to have, of course, education and the healthcare there, which are often part of the impact investment portfolios. Make a lot of sense, of course, and often the kind of some parts of at least marginalized within both of those sectors, I would say. Looking into 2025, not related so much directly to the solution themes, but on impact investing in general, what's your take on how the year will go? I'm not asking you to forecast the S&P 500. And how many points
investing.
It will be. Yes.
I think because of the backlash and because of the presidency and what's going to be happening in the US, we definitely have people asking and questioning, okay, well, we thought we would have some policies, practices happening in the government, and we don't have faith. Many don't have faith in the government to achieve what we are needing. So they're looking to activate other areas that they can. And so investments is a prime one to look at. Where can I have both reducing risk and then also achieving the economy that we need to have? And so I know you know this, and yet it does, I believe it's worth to say again, because it's obvious and yet not obvious, because not many of us are so connected to our investments, but we do get the economy we invest into. And so by shifting where we're investing, we're having such an incredible impact. One of the things that's actually coming up in the US is that, although this happens globally, we at Nia, I'm an asset manager, at making us 0.7% of just less than 1% of asset managers are women-led firms. And so even being able to move some of our larger funds to women-led asset managers having a huge impact. So we're noticing some changes happening and kind of movements growing to think about who's actually placing the investment dollars and being able to diversify that way. And then looking at impact investing, it's really about what kind of economy we want to have and where does the money need to go. And so I think there's been so much uncertainty coming into our economy just this year. Who was going to be running for president on the Democratic ticket? What were the outcomes of the election? And so money kind of stays on the sideline when there's uncertainty. And yet now that while there'll be chaos with, the new presidency, there's also, we know what to expect because we've had this before. So I do see money coming off the sideline, and both on the VC side and then also getting back into the public equities that matter. So I do think people are going to also be looking at, beyond the index to, what else am I holding? So I think there's more room for the impact investment movement to grow.
Mm. There is a lot of studies, at least, which I've seen about how the youth, the Gen Z investors, are much more conscious about where their investments are going and following through on the kind of impact of those things. Do you see this also on the US side?
I do. The young people didn't feel a place in the incumbent economy. They're not attached to it. They know it's never worked for them and they don't see it working for their future. So they don't want to invest, though, alongside. I would say people middle-aged to older are a little bit more stuck because they kind of thought this other economy was working and they don't really know how to get everything out and start over. Whereas young people are just starting and they don't want anything to do with Wall Street as they know it. So they are looking for alternatives. They want greener portfolios. They want values-driven portfolios. And they also aren't wed to what they want to reduce risk, and yet they really want the outcomes, both on the impact side. And so they are the ones, I guess, that are moving the needle that we see. Both young people and then also women. Women want to see other women in leadership when they get that opportunity. We know that women work harder, particularly in corporate America. And so, and we've just, there's a shift happening, I think, where there's a consciousness about what we can have and what we can expect in our investment portfolios.
Mm-hmm. There's a lot of kind of cultural impact things like women-led companies, which is with 0.7 of the asset managers female. That sounds really worrying number. Is there a way to fix it? I mean, on the kind of startup side, there is on a regular basis stories how 1% of the VC money is going to the female-founded companies, and at best in some countries it's 3%, and these numbers are quite worrying as for a middle-aged man like me.
I appreciate that this is something that you want to talk about, because sometimes it gets very gendered, even the discussions about what to change. And for smart investors, we're seeing you're leaving money on the table. Both women and people of color have amazing ideas and they're not getting backed. So we definitely see that coming up in healthcare, where we have such huge health gaps that could be solved when some of these entrepreneurs get funding. And then, of course, by the time we get to publicly traded companies, if you started out a very well-diversified company before you went public, then we'll then have that and those solutions available. And then, of course, we need asset managers who are women, just bring a different sensitivity and a different eye, both to sustainability and then some of the human capital management issues that haven't been present before. So we do see that our economy stands to get better when we do diversify. So just calling attention to who runs that portfolio. And it's a little mysterious, particularly in the US, how to even look up what's in a mutual fund in your retirement, much less who manages it. So the call to spend a little bit of time and ask advisors. Wealth advisors and wealth managers have a key role to play here in the education and doing a little bit of homework to share, hey, you're in 10 different funds, all run by white men. Is that fine? Or do you want to move some of your money to some of these others that are run by others? Because it is, again, we see it as a way to diversify a portfolio, which, going back to modern portfolio theory, which there's a lot of reasons why we don't want to go back to that. And yet one of the qualities is diversification. So thinking about really bringing all the best minds to the table here moving forward.
Is there any kind of... it's probably a problem. There are no quick fixes, right?
Money moves slowly because we don't have time in our busy schedules to look at it and figure it out. And at least in the US, it's very few and far between who learn how to do their investing. So there seems to be some paralysis. And then also people have shame, particularly the women have shame that they don't know how to do it. And yet, so then they don't talk about it, and then they don't do it, and then they feel really isolated. And then the patriarchy can really play into that. So we're really looking to have people unite, talk about their investments so they can learn from each other. We actually have a nonprofit in the US called Invest for Better. It might actually be global, I'm not sure, where women get together in cohorts and talk about their investments and learn from each other. And there's actually a curriculum. So we're really encouraging people to go together because to the extent that people can do this together, we can move quicker together. You can go to your bank and bring a friend. This doesn't have to be an isolated thing. And you can talk to people about where you're moving your money. The men are much better at that. They talk at the barbecue. They share, oh, I'm doing this investment. I've got this manager. Whereas the women haven't had been included in those conversations. They don't really know how to have those conversations. It's almost like money is taboo and we don't talk about it. And so trying to shift that will really speed up the way in which the money starts moving. And our earth can't wait to move into more sustainable investing. We need to divest from fossil fuels and put that money into the solutions that work for everybody.
I couldn't agree more on that one, definitely. The speed is the challenge. Most people with brain understand the problem, but as you said, the money is moving slowly, so it will take time. At the same time, if you look at the speed of the climate change around us, we don't really have much time to wait.
We don't have time to wait. No, we don't. And the market signals when we move can make tremendous change. And it does take all of us doing it together. And we do have precedent. The world did change with divestment in South Africa with apartheid. And so we have precedent when the world moved together to actually make change. And we can do that together with the fossil fuel industry. Of course, in the U.S., so much political ties to an incumbent industry that has made some people a lot of money, and they don't want to give that up. And yet, when we see adoption of some of these other solutions, there's quite a bit of money to be made in those as well, and reducing risk. So there's a lot of reasons to move quickly.
Good. Thanks. I think that's a very good point to wrap up this discussion. Thank you for your time, Kristin.
Oh, thank you so much. And all the best for this. I hope that your listeners are getting excited, inspired, and working together to move their money.
Stay curious, stay green, and stay tuned for the next episode of Nature Backed. Thanks for listening.
Hey, heard you like podcasts. Well, check out Dollar Bets. Two sports guys with faces for radio, betting live money against each other on air. That's Dollar Bets with a Z. Find us on the Winner's Edge.
Hi, I'm Sherilyn Fenn from Twin Peaks. What did you do on your last Saturday night?
Did you hear something?
Toilet paper.
There's none. Nada. The reserves have gone dry. People are hoarding it. I should have done that.
They're all out of hand sanitizer at my Target.
Mark, when did you last watch the news?
We are getting reports of forced quarantines in China, Japan, and now Italy.
You're cutting onions in half and putting them around your apartment.
Yes, exactly. It kills the COVID.
Excuse me?
Let's go. Let's go. Get in.
Vamos, rápido.
Have you ever driven one of these?
Never.
I'll drive, ladies.
I've got the keys.
Excuse me, I'm lost. I'm looking for my wife. I got turned around.
Join me, Eric Roberts, Jennifer Elise Cox, and Ed Asner for The Last Saturday Night, an Electrocast podcast. You'll love it. Electrocast. Electrocast.